The trend is your friend, and you need to stop fighting it. For all of you that think that the markets are going to go lower, whether that's equities or housing or whatever it is that you've been watching that you're waiting for the big pullback, I want you to ask yourselves a question. What is it that you know that the markets don't already know? Tell me the things as to why you think the markets are going to collapse. Now, stick around in the videos. We're going to talk about that. I'm also going to talk about some options trading and get into my position with Sofi, which I talked about last week, I think, and we'll go from there. Good morning. My name is Adam Kahn, and I'm the Rational Investor. I hope you guys are doing well. Today is Friday, February 9th. I can't believe how fast the year is going. When you get older, I'll explain the math to you, so the time really does go faster. Anyway, before I forget, before I talk about my options trading and why I think the markets are going higher, which is what I always talk about, not the options trading, but the markets. But do me a favor if you haven't already, hit that subscribe button, smash the like button. I really appreciate the support. It helps YouTube's algorithm and other people find the channel, which I know you guys know, and that's really cool because it's been nice to see how the channel's been growing. So there's a few old sayings in the market, and there's reason for them, like climbing a wall of worry and don't fight the trend, or the trend is your friend. There's good reasons for those things, and you really have to pay attention to the price action and what's going on in the markets. Again, don't forget, as we get further into the video, I'll bring up SoFi, I'll talk about options trading, and I'll discuss some of those concepts with you guys, and I'll let you know what my position currently is. But in terms of the markets, we had a big scare, things corrected. If you take a stock that I don't know anything about, the company Snowflake, but it's one of the ones that I've watched, and I know Jim Cramer years ago made some comment about it. It's just one of the companies you need to own. And at one point, I don't have the specifics in front of me, but I know it was trading $600 a share when it came out, or whatever the numbers were, and then it had a big correction, and it fell to, I don't know, 150, 140, 130, wherever it was. Now, at this point, nobody's really talking about it, and it continues to go higher. My guess is if somebody had owned that stock and sold it and now feels relief and doesn't own it anymore, and they see it from time to time go across the ticker on CNBC, and they see it going higher, they kind of shrug their shoulders and don't think about it much. When they finally think about it is when it's breaking all-time highs, and they'll think, I knew it. I knew I should have owned that stock. And they still probably won't buy it. When they finally buy it is when it's, 1.5 times higher than the old highs, and they finally give up and get back in. That seems to be typical market psychology. It's the reason I try to express long-term buying companies you really believe in and just sticking with them. Now, as some of you know, I'm not a huge fan of the exchange traded funds. I personally like individual stocks. This is not financial advice, by the way. You guys need to do your own research. I'm just sharing what works for me and the things I've learned over the years. But this is not intended for you. You guys need to do you. Do what works for you. Um, but I pick the companies I love and I believe in, and I consider it an investment in that company. Like, I don't have an issue putting money in Amazon. I believe in them. I don't have a issue putting it in Meta or Google or things like that, because I have comfort in, I know what the companies do, and I'll be comfortable even if the stock price goes lower, that I still want to own those companies. And the reality is some of them, like the ones that I named, if the stock goes lower, I actually want to own more, and I can buy more shares at a cheaper price. And I can do that with those. If I buy a company like Snowflake that I don't know anything about, when it falls, I get too nervous and I might be tempted to sell it and take a loss, like many people do, and vice versa. Then when it goes up, I think, oh, it must be going higher, and I get too excited about those companies. So it's why I try to stay away from them. That doesn't mean they necessarily don't work for you, but I just know that about myself. And I think being invested in the markets, you have to be pretty introspective about who you are and what works for you. That being said, overall, I still think the market is going higher. All the news that's out there that is scaring everybody. Well, the big investors, the big funds, they are well aware of all that news as well. They know about the wars going on, they know about the credit card debts, they know about the reverse repo markets. They're well aware of all of these things. So, unless there is a black swan event that comes out and happens and catches everything out off guard, the markets tend to continue in the directions they're going. Um, I'm going to switch the angle. It looks like the sun's terrible in my eyes, and it looks like I have no eyes. Well, hopefully, I didn't mess up with you guys too much with that juxtaposition, but it's a little bit cold in the shade, and I wanted to be in the sun because it's nice and warm out. Anyway, really, you have to stay with the trends and recognize that the news and the media and all the people that are gloom and doom, it's just noise. Same if it's the other way around. If all the news is wonderful and everything is great and the markets are going lower, that's just noise as well. You have to pay very close attention to the price action. So at least right now, while the market's continuing to chug along, what I look for are companies I love that have news and cause it to drop in price. I talked about Archer Daniels Midland when they had that bad news. Now, it's possible the news comes out and it's much worse and the stock goes lower, and maybe even it's an Enron and it's total lies and everything else. My personal belief, and again, you guys don't have to follow that, is it's noise. And yeah, they're going to find out they were doing some things they shouldn't be, but the company's a great company that probably makes good money. And at least right now, since Wall Street doesn't like lack of clarity, I think it's rather discounted, even if that means it ends up going lower. When there's no good insight as to what's going on and what's going to happen going further, even the big institutions, they can't take that type of risk with $1 billion or whatever those numbers are. So they tend to get out of companies that there's not clear path and clear understanding of what's going on with the financials. They also are probably having a difficult time pricing it fairly because they don't know what the earnings are and they don't know what they'll look like going forward. I'm actually excited to see what the company says at their earnings report next week. But for me, I'll buy it now. I'll buy it at a discounted price. If it ends up going lower, I'll still feel like I got it at a discounted price and the news came out and it was worse than I expected. And oh, it was a bad decision. But I'm okay making bad decisions on things that I think are good companies at discounted prices. The other thing is look at some of the stocks and what happened after their earnings. People look at Meta and they think the reason now that it's gone from 400 up to all the way up to $480 a share, or wherever it is today, I think $470 maybe. But they just think that means it's overpriced. But the reality is they had phenomenal earnings. And if you look at the price to earnings ratio, it really makes sense to where the price of the stock is now. And if they continue to grow their earnings, the price should continue to go up. And what I keep pointing at is, do you think that the earnings of companies like Meta and Google and Amazon are going to be significantly impacted whether the Fed raises rates a quarter or if they end up lowering rates as they've indicated or not? My guess is the companies continue to work around that and figure ways to continue to be profitable, which is why I want to be invested. I don't want to be so scared to be on the sidelines because the one thing I know is if my money sits in cash, no matter how little the inflation is, that cash is constantly going to be worth less and less money over time. So, anyway, let's talk a little bit about SoFi and where I am now and some option strategies, or at least the trades I have on, because I know some of you want to learn about options. And if you wanted to learn about options, ask the questions. I'm happy to answer any of them. Um, while I understand it all, I don't always have a great ability to express it and teach. I'm a good teacher, I think, but I'm better at questions and answering it than just flat out coming up with explanations out of the blue. And I understand delta and gamma and theta. I got to learn about it from my brother, who was an options trader on the floor at the Chicago Board of Options Exchange back when it wasn't just computers and people actually did it. So Right now, SoFi, before I came on the video, was trading around $8.20. I'm short two of today's $8.50 puts. So odds are I'm going to get assigned 200 more shares from essentially $8.50, even though it's trading at $8.20. I sold those for around 30 cents a piece. So if it ends where it is now, I kind of am break even depending on how you look at it. I've already sold a couple calls in anticipation of being assigned 200 additional shares. Now, that'll give me a total of 600 shares. I'm actually short an $8 put, and I'm short a $7.50 put for next week. With the 400 shares I own, the additional 200 that I might get assigned, and if the stock goes lower and is below $7.50, I would end up owning a total of 800 shares. I've also sold three calls. I've sold an $8.50 call for next week, a $9 call for March 1st, and a $9.50 call for March 1st as well. The reason I pick those is I try to get at least 1% on anything that I sold, and the $9.50 call was the worst priced, and I got 9 cents. The stock's trading around $8.20, so 8 cents is about 1%, and that's over 3 weeks. I think that's good return. Um, in some ways, it's a little bit more, but they charge 50 cents to be able to do those trades. So that's where my head is. If the stock goes higher and by March 1st it's above $9.50, I'll still have 300 shares, assuming I get assigned the 200 today. So that's kind of how I trade the stocks that I use short term options on. There's very few I do that with. I do it with SoFi, which and I do it with Enphase sometimes, and I also do it with Coinbase because it gets so volatile. But again, as I mentioned earlier, I don't always trade the really volatile ones so well, so I do it very small and I think very cautiously with those. But I'm more likely to use options on a much longer trajectory. Like I own some Google and I sold calls out for next January if the stock gets above 200 or $220 a share. I don't get a lot of money, but if Google goes from $150 all the way to $220 in 10 months, now 12 from the time I bought the stock, because I want to be long term capital gains, I'm okay making that profit. And if it doesn't, well, I feel like that's the way to get a dividend from a stock like Google. And I've done similar. I know I've talked about it in other videos with Target. I was fortunate enough to pick up a bunch of shares when it got down around below 110, and it's already up to today. It was at up 147, and I had sold a 210 call, and I had also sold a $240 call. I don't get a ton of money for it, but I got approximately what the dividend payment is. So I feel like on those shares, I'm getting an extra dividend payment. And if Target is above 210 come January, well, I might have to give up some shares. And hopefully, there are companies around that time that I'm happy moving into if I get taken on my target. Similar to Google and similar to SoFi, I don't do it with all of the shares I own because I tend to buy companies I want to own. Um, Coinbase is probably the only one that's more like me just gambling, going down to the casino and throwing it on red. I don't know if I want to own Coinbase or not. Maybe it's the greatest thing ever. My hope and my thought on Coinbase as SBF and his company got in trouble, and as they're going after Binance, and maybe they end up going after Kraken, that the government has decided that Coinbase will be the trading platform. I don't know if that gives them an exorbitant evaluation or not, because to be fair, they're already priced pretty expensive as a market cap in comparison to things like the CME or the Nasdaq. But I don't know what it'll become, so I don't know that I love that investment or not. Now that's just me oversharing a little bit about myself. Anyway, hopefully that's some good information about how I feel about the markets. It's not my opinion about the economy. It's not my opinion about the world and what's going on with credit card debt. But I do think that the big funds and the ones who really drive the prices of things are well aware of anything and everything that the people who are nervous about point to. They would have to come up with something that's not known, which not even possible. So before I forget to go and don't say it again, thumbs up, subscribe, have a great weekend. I'm super excited. I'm going to go to some events down at the Win. My buddy runs a company that is putting these on. I'm getting to go see the thing with Shaq and Little Wayne and something with this guy Gronk that I went to last year or 6 months ago. And I think there's even a Guy Fieri type of thing going on. So pretty excited to get to go do those things this weekend. Don't forget, subscribe, like, have a good weekend, and I'll talk to you soon.